Hey, let's talk about the dogs of the Dow investment strategy. Maybe you've heard of it, maybe you haven't. What is the dogs of the Dow? Well, the Dow Jones Industrial Average is made up of 30 major companies here in the United States, all right? The dogs of the Dow is the 10 bottom companies in that list. So we're not talking the top dogs, we're talking the bottom dogs of the Dow. Here's how it works. Back in 2020, these were the 10 poorest performing companies within the 30 Dow Jones companies. We had Dow Chemical, Exxon, IBM, Verizon, Chevron, Pfizer, 3M, Walgreens, Cisco, Coca-Cola. So what do you do if you're going to be a dogs of the Dow investor? Well, what you should have done is on January 1st, or the first trading day of January of 2020, you would have bought these 10 companies. All right, and so let's just say that you had $1,000. Let's say you had $10,000 to invest. You put $1,000 into each of these 10 companies. All right, so you're equally diversified into these dogs of the Dow, and you hold them for 1 year. These companies are paying dividends. You're taking those dividends and you're having them reinvested, so you're buying more of these shares, and the idea is you're buying them on sale. Now, what happens is the next year comes out, and some of these companies are going to move up, some of these companies are going to move down, and some of them are going to move out completely because they did really well during the calendar year, right? So then in January of 2021, you're going to say, well, what are the dogs of the Dow this year? Chevron's still here, IBM's still here, Dow Chemical's still here, but Pfizer's gone. I'm going to sell my Pfizer in January, and what am I picking up? Well, I'm going to pick up Merck, and I'm going to pick up some Amgen because these weren't in the list last year. So again, I take my $10,000, I spread it out equally amongst these bottom 10 companies in the Dow in 2021, and I hold them for a year, and I have my dividends reinvested for a year. And then what I do is I come in January 2022 and I do the same thing over again. Here's the thing about the dogs of the Dow. You're looking for dividend income that you can reinvest all throughout the year. You're taking what's called a contrarian approach, meaning an opposite approach. You're not looking for the ones that did the best, you're looking for the ones that did the worst in that year. Here's why. You're thinking about the potential capital appreciation. If Dow was the absolute worst performing company within that group in 2020, you would think, hey, the next year they've got the most room to possibly improve in their share price. So you're trying to buy low and sell high at the end of the year. That's capital appreciation combined with dividend reinvestment. And the thing you have to pay attention to if you're going to apply this theory to your investments is you've got to rebalance every single year. You buy in January, and then you rebalance and buy in January, and then you rebalance and buy in January, and you rebalance and buy in January. You got to pay attention to it if you're going to be a dogs of the Dow investor. Dividend